Hello, hello everyone. Today, as a part of my macroeconomics assignment, I'll be discussing the monetary policy of Japan. These are the following few slides that we are going to discuss. First of all, introduction. So, Japan's economy is one of the largest in the world with a GDP of over $5 trillion. The country has a unique economic history, having experienced both significant growth and periods of stagflation over the past several decades. One important factor in the Japan's economic development is its monetary policy, which is set by the Bank of Japan. In the adjoining figure, you can see that the 10-year GDP data of Japan in the year 2011 and 12, we can see that GDP of Japan was around 6.2, 6.3 GDP in trillion dollars, while as of today, it is around 4.9 trillion dollars, which is significantly lower than 2011 and 12. Now we'll discuss some historical background. So Japan's modern monetary policy framework began in the late 1990s, following a period of economic stagflation and deflation known as lost decade. In 2001, the Bank of Japan adopted a new policy framework known as quantitative easing, which involved targeting the money supply directly rather than relying on interest rate adjustments. Further, in 2013, the Bank of Japan announced a new policy known as Abenomics, which was named after the then Prime Minister Shinzo Abe. The policy involved a combination of monetary easing, fiscal stimulus, and structural reforms aimed at promoting economic growth and overcoming deflation. And at present, despite these efforts, Japan's economy has continued to face challenges in recent years, including an aging population and low productivity growth. The Bank of Japan has continued to implement various monetary policy to address these challenges. Now, we'll discuss objectives of monetary policy. First of all, price stability. One of the primary objectives of Japan's monetary policy is to maintain price stability by managing inflation. The Bank of Japan has set the inflation target of 2% to achieve this goal. Next, financial stability. The Bank of Japan also aims to maintain financial stability by ensuring financial institutions are sound and the banking system is stable. The Bank of Japan monitors financial system closely and takes action when necessary to prevent disruption. Further, economic growth. Another objective of Japan's monetary policy is to promote economic growth. The Bank of Japan uses various policy tools to encourage lending and investment, which can help stimulate economic activity and create jobs. And in the end, exchange rate stability. The Bank of Japan may intervene in currency markets whenever necessary to prevent excessive fluctuations in the value of yen. Now we'll discuss some policy tools. First of all, open market operation. The Bank of Japan uses open market operation to control the money supply by issuing government bonds in the open market. Under this policy, when Bank of Japan buys bond, it injects money into the economy, which potentially lowers interest rates. And when it sells bonds, it reduces the money supply, which increases interest rates. Further, reserve requirement. The Bank of Japan also sets reserve requirements for banks which determine how much money banks must hold in their reserve against their deposit. By changing reserve requirement, the Bank of Japan can influence the amount of money that the banks have available to lend and the overall money supply. Next, we'll discuss discount rate. By changing the discount rate, the Bank of Japan can influence the interest rates that banks charge on loans and the overall level of lending the economy. Finally, we'll discuss what is forward guidance. Bank of Japan also provides forward guidance, which is a statement of its future policy intentions. It helps shape expectation in the market and influence interest rate and economic activities. Now we'll discuss some of the recent developments. First of all, negative interest rate. In February 2016, the Bank of Japan introduced negative interest rate for the first time, meaning that the financial institution would be charged interest for holding excess reserves at the central bank. Then COVID-19 response. In response to the economic pandemic of the COVID-19 economic impact of the COVID-19 pandemic, the Bank of Japan has taken several measures to support the economy, including increasing asset purchases and providing loans to financial institutions. Then we'll discuss digital currency. In October 2021, the Bank of Japan announced it would begin experiments on a digital currency. The aim of this project is to promote innovation in payment systems and enhance the efficiency of monetary transaction. Next, yield curve control or YCC. On December 2022, the Bank of Japan announced it would relax YCC policy, in effect enabling the Japanese 10-year bond yield to reach 0.5%, which was previously 0.25%. This step was majorly taken to curb the inflation levels. Next, we'll discuss some of the criticism and challenges. First, high public debt. Japan has a highest level of public debt in the world, which limits the government ability to implement fiscal stimulus to support the economy. Next, we'll discuss yen appreciation. Japan's monetary policy has also been criticized for contributing to yen appreciation, which makes the country's exports less competitive in the international market. Finally, we'll conclude our presentation. The country has implemented unconventional measures such as negative interest rates and quantitative easing to stimulate the economy and boost inflation. While these measures have some success, they have also faced criticism for their potential long-term effects, including the risk of asset bubbles and increased government debt. Additionally, Japan's aging population and low birth rate present ongoing challenges to its economic growth and sustainability. With this, we'll conclude our presentation. Thank you.